years ago, I made one investment decision, and in less than 48 hours, it wiped out a huge chunk of my money. Not because the market crashed, not because the company failed, but because I ignored one rule that almost every successful investor follows. Today, I'm going to show you exactly what happened, and the simple system I now use to make sure I never repeat that mistake again. I made an investment mistake that cost me more than just money. It cost me confidence, it cost me sleep, and for a while, it made me question whether I should even be investing at all. And the worst part, it didn't happen because I didn't know enough. It happened because I ignored what I already knew. In this video, I'm going to walk you through exactly what happened, the decision I made, the moment everything went wrong, what it actually cost me, and the system I use now to make sure I never repeat that mistake again. Because if you're investing right now, there's a very high chance you're closer to this mistake than you think. Part 1, the beginning, false confidence. When I first started investing, I wasn't trying to get rich overnight. At least that's what I told myself. I wanted to be smart with money, build something over time, be disciplined. But then something happened that changes a lot of people. My first few investments worked, and when that happens, it feels amazing. You check your account, and it's up. You didn't do anything crazy. You just picked something, and it went up. So naturally, you start thinking, okay, maybe I understand this. You watch a few more videos. You follow a few more people. You start recognizing patterns, or at least you think you are, and slowly, without realizing it, your mindset shifts. You stop thinking like a beginner and start thinking like someone who has figured it out. And that's dangerous because early success in investing is often just luck in disguise, but it feels like skill. Part 2, the build you peak, the hype. Then came the opportunity, the one that felt different, the one that felt bigger. It wasn't just a random stock or investment. This one had energy, momentum. Everyone was talking about it. YouTube was filled with videos about it. People were posting gains, screenshots, predictions. This is just the beginning. It's going to 10x. You're still early. And I remember thinking, if all these people are seeing it, how can it be wrong? But deep down, there was a small voice, a quiet one, asking questions like, what if this is already too late? What if this is just hype? But I ignored it because hype is loud and logic is quiet. Part 3, the decision, going too big. Here's where I made my biggest mistake. I didn't just invest, I overcommitted. I put in more money than I was comfortable losing, and I justified it. I told myself, if I really believe in this, then I should go in big. But that wasn't belief, that was ego. I wanted to be right. I wanted to prove that I could spot a winning opportunity, that I wasn't just lucky before. And when ego enters investing, discipline leaves. Part 4, the illusion of being right. And for a moment, it worked. The investment started going up fast, faster than anything I had invested in before. Every day, it was higher, and that feeling is addictive. You start checking your account constantly, watching the numbers climb, imagining what it could become. I started doing the math in my head. If it keeps going like this could change everything. And that's when it gets dangerous, because you stop thinking about risk and start thinking about outcomes, big outcomes, life-changing outcomes. Part 5, ignoring warning signs. But there were signs, clear signs. The price was moving too fast. The conversations were getting more emotional. People weren't analyzing anymore. They were celebrating, and that's usually a signal. But I ignored it because I didn't want to exit too early. I didn't want to miss more gains. I told myself, it'll go higher. I'll sell later. I just need to time it right. But timing the market is where most people lose. Part 6, the drop. And then it started to fall. At first, it didn't seem serious. Just a small drop, something normal. I told myself, this is healthy. Markets always pull back. But then it kept falling and falling and falling faster than it went up. And suddenly, all those gains started disappearing. And I froze. I didn't sell. I didn't act. I just watched. Because selling would mean accepting I was wrong. And that's hard. So I held on, hoping it would recover. Part 7, the realization. But it didn't, and eventually, I had to accept it. I had made a bad decision. Not because the investment was terrible, but because my process was. I didn't follow a system. I followed emotion. I didn't manage risk. I chased upside. And that realization hurts because it forces you to look at yourself honestly. Part 8, the real cost. Yes, I lost money, but money can be earned again. The real cost was internal. I stopped trusting my judgment. Every decision felt uncertain, even good opportunities. I hesitated because once you experience loss like that, you don't just become cautious, you become fearful, and fear can be just as damaging as greed. Part 9, the lesson. So what did I learn? The biggest lesson wasn't about the market. It was about behavior. Investing isn't just numbers, it's psychology. And if you don't control your emotions, they will control your decisions. And your decisions will determine your results. Part 10, system correction. After that experience, I didn't quit investing, but I rebuilt how I approached it. I created created rules, non-negotiable ones. Rule 1, never risk too much on one idea. No matter how good it looks, no matter how confident I feel, I never put myself in a position where one decision can hurt me significantly. Rule 2, if it feels urgent, step back. Pressure is a red flag. Good investments don't require urgency. If I feel rush, I pause. Rule 3, time creates clarity. I never invest immediately. I give it time because emotions fade, but logic stays. Rule 4, protect capital first. Making money is important, but keeping it is everything. Rule 5, accept being wrong early. If something isn't working, I don't hold on out of hope. I adjust. Part 11, reflection. Looking back, that mistake was painful but necessary because it forced me to grow. It forced me to become more disciplined, more aware, more patient, and those qualities matter more than any single investment. So if you're investing right now, remember this: the biggest mistake isn't losing money. It's repeating the same behavior over and over again. If this helped you, subscribe, because I don't just share wins. I share the mistakes that actually teach you something. And those lessons are the ones that matter most. Part 12, the internet gold rush, where money is actually being made. Here's something that surprised me. While millions of people are trying to time the market, a completely different group of people is quietly making money online every single day. Not through hype, not through gambling, through simple digital leverage. The internet has created opportunities that didn't exist 10 years ago. You don't need millions. You don't need Wall Street access. You just need a laptop, internet, and the discipline to execute. And the people who understand this are quietly building multiple income streams online. Let me show you 5 extremely simple ways people are doing it right now. 5 super easy and profitable online money ideas. 1. Digital products, the highest margin business online. This is one of the most powerful models. You create something once and it can sell forever. Examples: a $19 investing guide, a $29 budgeting spreadsheet, a $49 online course, a $9 financial checklist. Platforms like Gumroad, Etsy, Shopify, Amazon KDP allow creators to sell digital products globally. And the best part, once it's built, it costs almost nothing to sell again. That's leverage. 2. YouTube education channels. Channels like finance, productivity, investing, AI tutorials are generating massive income streams, not just from ads, but from sponsorships, courses, affiliate products, digital communities. Some creators make $10,000, $50,000, even $100,000 plus per month from educational content, and most of them started with zero audience. 3. Affiliate marketing. Affiliate marketing is one of the simplest business models online. You recommend useful products, and when someone buys, you earn a commission. Examples: investing platforms, books, software tools, financial apps. Companies are happy to pay 20-50% commission because you're bringing them customers. You become the bridge between the product and the buyer. 4. Newsletters, the quiet million-dollar business. Some of the smartest investors online run email newsletters. They share market insights, investment ideas, financial education, and monetize through sponsorships, paid memberships, affiliate deals. Platforms like Substack, Behave, ConvertKit have created an entirely new creator economy. A newsletter with 50,000 readers can generate 6-figure revenue. 5. Print-on-demand businesses. Print-on-demand means you design products, but someone else handles manufacturing, shipping, inventory. Examples: t-shirts, coffee mugs, posters, journals. Platforms like Printify, Redbubble, Amazon Merch allow you to build a product brand without owning inventory. Some creators have built $500K plus businesses doing this. Part 13, the AI money wave, the biggest opportunity right now. Now let's talk about something that may be even bigger: artificial intelligence. AI is not just a technology shift, it's an economic shift. The people who learn how to use it early will have massive leverage. Here are 2 powerful ways people are already making money with AI. AI idea 1, AI content studios. Businesses need content constantly. Blogs, marketing, social media, ads. Using AI tools like ChatGPT, Midjourney, Runway ML, one person can now run an entire content agency. Some freelancers are charging $500, $1,000, $5,000 $10 per month per client because AI dramatically increases productivity. AI idea 2, AI automation for small businesses. Thousands of small businesses are struggling with customer service, booking systems, email responses, social media. If you help them implement AI automation, you can charge monthly service fees. For example, AI customer support bots, automated email marketing, AI appointment scheduling. Some consultants charge $1,000 to $10,000 per project, and demand is growing rapidly. Part 14, the real lesson about money. Here's the truth that most people eventually realize. Wealth rarely comes from one big lucky investment. It comes from smart systems, diversified income, disciplined decisions, long-term thinking. Exactly the principles used by the most disciplined market analysts. The kind of thinking you hear from investors like the maverick of Wall Street. No hype, just clear analysis. Because the real goal isn't getting rich overnight. The goal is building financial stability that lasts decades. And before you leave, I want to ask you something. Out of everything we talked about today, what surprised you the most? Was it 1. The investing mistake, 2. The psychology behind losses, 3. The online income ideas, 4. The AI opportunities? Comment 1, 2, 3, or 4 below. I read every comment, and your response actually helps decide the next videos on this channel. And if you want to learn the 7 investments millionaires quietly buy before age 40, the passive income pyramid that builds wealth automatically, and the AI tools that could change your financial future, click the video appearing on your screen right now, because the next video might show you an idea that changes your financial life. And if you believe financial education should be clear, honest, and powerful, subscribe, because this channel is about real strategies, real mistakes, and real money, and we're just getting started.